Hello and welcome to this edition of the Market Share. I'm Paul Gifford, Chief Investment Officer at First Source Bank. Joining me today is Jason Cooper, one of our longtime senior portfolio managers. Jason, equity markets have been really good the last several weeks. In fact, normal times, September and October, are really bad for equity investors. We've had exactly the opposite. I think we're on a 6-week win streak. So where do we kind of go from here, and how should investors think about the equity markets?
Yeah, the S&P 500, as Paul has mentioned, is in some rare air. We see the market up over 24% year to date, and as Paul has alluded to, September and October tend to be the worst 2 months of the calendar year. What I wanted to do was provide a good chart that just shows exactly what I'm talking about as far as the rarity of what we've seen to this point year to date. And what you notice in this table is that it doesn't happen that often. In fact, we haven't seen anything like this going back to the 1900s or the 20th century in terms of a 20% return this far in this part of the year. It's only happened, as you see, that many times. And if you throw in the fact that we are in an election year, it really hasn't happened since 1928. So this is some great stuff in terms of the returns we've seen, and some of the conversations we have with clients these days is, just what is it we should be thinking about or doing when we see returns like this for a year-to-date return. And really, it's just a matter of meeting with your portfolio managers or your advisor to just have the conversation around, are you guys doing the right things in terms of goals? Is the asset allocation correct? But just going back and having that conversations. Because to have that conversation when markets are like this are definitely a lot easier when markets are not doing so well and you have those hard conversations. The other thing that's so great about our market is relative to other countries globally, we're doing very well if you look back to the last decade. In fact, if you look at the last 10 years, we have outperformed 8 of those 10 years. So it's been a great run that we've been on this past 10 years. We've seen annualized returns of approximately 13%, which is not typical. And so going back and having that, just re-strategizing is a great tool, a great exercise to do with your clients.
Yep, it's a great conversation to have with us, and one we should have regularly with our clients. What's also important about this time of the year is it's earnings season.
Yeah.
And why don't you share what we're seeing in earnings season, particularly with those magnificent 7 that have been so good this year?
Yeah. That's really the big topic, right? So go back to that return conversation. 40% of that return is the magnificent 7. And why is that so important going forward is there the possibility the tide changes? This week, in this table, you can see we have 112 names reporting. None of them are the Magnificent 7. It's not until next week do we see 5 of the 7 reporting, which is going to be pretty crucial in terms of what we might have going forward for Q3 and into Q4. The conversation now has been more around, is it possible that we see more earnings get driven from the other 493 names that are in there? I have a chart that's in here that shows from Goldman Sachs, actually, that shows the expectations are that we're going to see more of the growth or the potential for growth come from the other 493 names than just this 7. That's a good thing, I think. It's constructive because we've seen these 7 do so well and carry so much of the weight. We really need the other 493 to do more of that heavy lifting and see that just spread out a little bit better. So it's a great chart to see that, expectations are that's going to start changing. So, yeah.
That's great. Great information and great advice on meeting with your portfolio manager and your team at First Source as we go forward in these markets. As always, Jason, really appreciate those insights. If you enjoyed today's video, I encourage you to share that with your friends and family. If you do not currently subscribe to the Market Share, you can do so using the QR code at the end of the video. And as always, thank you for the opportunity to serve you and your family, and have a great day.